Good morning, and once again, welcome. For our first panel, we have brought together senior industry leaders and regulators for what we hope is a frank discussion on the future of Hong Kong as China's international financial center. Our panelists are Mr. Nicolas Aguzin, who joined Hong Kong Stock Exchange as CEO this year, Ms. Rachel Lord, the Chair and Head of Asia Pacific at BlackRock, Mr. Charles Lin, Vice Chairman of CLSA Group, and on the end, Mr. Gokul Laroia, Co-CEO Asia Pacific at Morgan Stanley. Also, joining us on the screen are Mr. Shen Bing, Director General of the Department of International Affairs at the China Securities Regulatory Commission, and Mr. Ashley Alder, the SFC's CEO. Well, Hong Kong has unique advantages as a bridge for financial flows between China and the rest of the world. As we heard from the Financial Secretary just now, Hong Kong is set to continue to play a crucial part in the nation's development, and there will be more opportunities for the further opening up of the mainland market, the development of the Greater Bay Area, and the expansion of mutual market access schemes. At the same time, much has changed in Hong Kong and global markets since the introduction of the Stock Connect program 7 years ago. So on that note, Gokul, perhaps I can start with you. Considering the prevailing macro trends, what do you see as Hong Kong's future role as a financial center?
Maybe I'll start with something that you referred to, Tim, which is Stock Connect.
Right.
Because in many ways, I feel ever since this was introduced about 5 years ago now, it has been a real game changer for everyone, global investors, the mainland markets, how it shaped the mainland markets, and I certainly am a real believer that this is a trend that is definitely not reversible, and in fact is only going to grow. As the mainland markets have become a much greater scale, increased liquidity, more attractive to own, and in many ways, frankly, owning them is not an option because both on the equities and fixed income side, index inclusion has become a real factor. So you have to own them. And what we've found, speaking with a whole host of investors globally, the preferred means of ownership, at least now and for the foreseeable future, is providing access to the mainland through Hong Kong. And this is for a whole host of reasons. Some of them sound quite trite, but the existence of stable, predictable regulatory framework, the human capital, the physical infrastructure, this is stuff that everyone knows, but this is not something collectively that gets disintermediated easily or quickly, and frankly hasn't been for a while, and we don't really see that happening for a while. So my view on this is that accessing the mainland directly and accessing the mainland through Hong Kong coexist. And there will always be a reason to coexist, and there has been, and there will always continue to be. And in fact, that's just going to grow. The other thing I would say is for a whole host of reasons, the mainland markets are becoming more local. And when I say more local, local to the mainland and local to Hong Kong, the ownership of Chinese equity is moving to Hong Kong and the mainland. A few years ago, if you sort of did an analysis of how global investors own Chinese equity, it was the US, it was Hong Kong, and then a little bit of the mainland. That has changed dramatically. The mainland offers much more diverse access to Chinese equity. People want that diverse access. Ironically, the geopolitics and some of the regulatory changes have increased the desire to own a broader cross-section as opposed to just own tech. That broader cross-section of equity actually is available in the mainland markets. And that's a trend that we're going to see continue to grow. And the last thing I'd say is, as it relates to market cap creation, one of the interesting phenomena has been the export of the Chinese capital market, the export of the Chinese capital market to the US, for example. That's been, I mean, it's been okay because it's been a good means to raise capital, but one of the things that's happened is that a lot of the most attractive Chinese businesses have actually gone and listed outside of China where local investors can actually participate. That is going to change. Whether that happens in Shanghai or Shenzhen or Beijing for that matter, or in Hong Kong, it doesn't matter because it's going to stay in this part of the world. And as it does, I think Hong Kong's role as providing access to that group of companies that will actually list locally is only going to become more important.
Thank you, Gokul. Charles, on the same point, how do you see Hong Kong's future role and opportunities, please?
Yes, I would see this from a few points. I think first of all, from capital raise perspective, right? Hong Kong's main competitor will be Singapore and Tokyo in the Asia region. So I think in 2021, year to date, Hong Kong has facilitated a raise of more than 100 billion US dollar between equities and bonds, which is around 70% of the total capital raised among Hong Kong, Singapore, and Tokyo. And I think also Hong Kong Stock Exchange ranked number 4 in terms of IPO capital raising. Year to date, I think 37 billion US dollar. In last year, I think Hong Kong Stock Exchange raised around 500 billion Hong Kong dollar, which ranked number 2 globally. By the way, in the past 12 years, never 7 years, Hong Kong ranked number 1 in terms of equity IPO capital raised. And the second point is about the connectivity between Hong Kong and mainland China. So Stock Connect was launched in 2013, and we have seen a 10.8% CAGR growth in terms of average daily trading volume. And today, our average daily trading volume for Stock Connect is around 23 billion US dollar. Also, if we look at the Bond Connect, which the northbound was launched in 2018, and the southbound just launched this year. We have seen more than 2,800 investors have invested in the China onshore bond market. And their 600 billion US dollar bond was held by international investor, which accounts for 3.5% of the total ownership in China. The third point I've seen is from the RMB internationalization. So Hong Kong definitely is the second to none offshore RMB center outside China. So Hong Kong has 50% of the offshore RMB deposit and also accounts for 75% of all RMB, offshore RMB activities according to SWIFT. And the most recent launch of the eCNY trails, which will also connect eCNY with Hong Kong domestic payment system. It also suggests that this offshore RMB open up will may be more towards into the trade rather than capital oriented, so which can also support Hong Kong's position. And the last but not least is about the overall regulatory and law environment in Hong Kong. So as a lot of investors come to Hong Kong, there's no restriction of the money in and out of Hong Kong. There are a lot of connectivity between Hong Kong and the mainland China, especially in the startup company. I think China is the second largest startup market outside the US, and which also provide very good accessibility for the private equity firms outside of China. Also, Hong Kong has a very good soft environment compared with a lot of other financial centers in Asia. Right? So if I look at Hong Kong, there are 300,000 financial service employees, which accounts for 7.1% of the total population, total employment. And Singapore is around 200,000. So I think in overall, Hong Kong has more than 100,000 financial service employees. And also, Hong Kong's corporate tax rate is much lower compared with Singapore and Tokyo. And Hong Kong, among the top 100 universities globally, Hong Kong got 5, Singapore got 2, and Tokyo got 3. I think those are also the soft factors can support Hong Kong to remain as a global financial center down the road.
Thank you, Charles. Perhaps at this point, can I bring in Ashley? We have heard 2 of our panelists talk about Hong Kong's future role and opportunities. Are you in agreement with their observations and comments? Or have you got anything else to add?
Yeah, sure, Tim. First thing I'd say is I wish I was with you, but I'm now at the tail end of quarantine period after coming back from COP26, which the FS mentioned. So, yeah, just to kind of reflect on some of those comments so far. I think, firstly, it's pretty clear that so far as mainland China is concerned, as its economy rebalances, and of course there is the the dual circulation strategy is part of that. It's quite clear that inbound flows are seen to be important, particularly around domestic consumption and demand side aspects of that transformation. And I think that our experience in speaking with global firms, global investors around Hong Kong as an access point is, and then looking at mainland China, is basically returns, relative returns, far more confidence around currency, and also, of course, a vast, largely unaddressed market domestically, giving opportunities onshore mainland China for those firms. I think, obviously, one thing that hasn't been mentioned so far is the background of US-China tension. And I think it's quite interesting is that the US government and the official sector, I think, certainly are pursuing policies around decoupling some aspects of capital flow. So, specific examples involve the SEC and more broadly, the intention to delist China businesses from the US stock markets, subject to the question of whether or not there is agreement on audit oversight. And my own view is that it is more likely than not that that will happen. In other words, those delistings will happen, from what I pick up in discussions, internationally. But that is quite different. The ambitions and the strategies of global firms and global investors, including US, don't correlate with that, in my view, because they see, as others have said, they see Hong Kong as a very important aspect of access to China, and I think as Gokul mentioned, index inclusion, among other things. It means that this is not an option; it's something that must be done. So I think basically what's happening is that Hong Kong, against that political background and that decoupling background, if anything, is more important. It's an efficient access channel. It's a place to manage China exposure, as we can see from the success of the Asia futures contract. And it continues to be a place where mainland companies or China companies can list to tap international capital as well as local capital from the mainland. So I think on top of that, firms or global firms will also be, and they are, establishing operations in mainland China to compete in the domestic market and to serve that unaddressed market. And that also is relevant to Hong Kong, because most firms have said that the build-up of resources in the mainland will also be mirrored with the build-up of resources in Hong Kong. So, of course, this isn't all free from risk. We've had a background of potentially competing sanctions. We have discussions around data localization and similar, but actually my take on this is that so far, after roughly 18 months, maybe 2 years of navigating through some of those issues, so far they're manageable in reality. So I'll leave it there, and back to you, Tim, but happy to interject later on.
Yeah, thank you, Ashley. We are very glad to have Mr. Shen Bing joining us today from Beijing. Mr. Shen, How do you see Hong Kong's future role as a financial gateway to and from the mainland? We have heard a lot about the dual circulation strategy and the common prosperity drive. Can you tell us what the implications are for Hong Kong, Mr. Shen?
Thank you, Chairman Lui. And I think much has been said about the unique role of Hong Kong as a financial gateway to and from mainland China. I think this role, to put it simply, this role is only to be strengthened under the current environment and in the foreseeable future. So I think I fully agree with other panelists about the unique roles, like, for capital raising, for connecting global capital. I think if you look at a supply and demand relationship, the demand strong, enormous demand for capital raising and investment and financial services from mainland China remain. And the unique advantage of Hong Kong as a financial center remains. With those supply and demand, coexist. So we can see only a stronger role of Hong Kong. And if you look back at the 30 years development of mainland capital markets, and we have seen such a role played by Hong Kong, and we are very certain that Hong Kong will play a stronger role here. About the dual circulation, there's a lot of discussions in the market, and some press talking about that China start, looking inward. Actually, that's a wrong interpretation. So dual circulation is not about, looking only inward, but also, strengthen the international circulation. So Hong Kong has a special role, and have a special role in, facilitating this international circulation. I think that's helping Chinese firms, for example, to allocate resources globally, and helping international capital to allocate their assets, allocate their investment in the Chinese assets. So in this way, not only this supply and demand, as I mentioned earlier, will be facilitated by Hong Kong, but also this will be beneficial for global investors and the economy in China. So regarding the point you mentioned about the common prosperity, so people are, very paying close attention to the development in mainland China. The key area is, I think, is anti-monopoly regulation applied for some industry sectors. So I think these are the intention of these policies are only to make sure that these sectors will have sustainable, stable development, and at the same time to maintain social equality while we pursue a high-quality growth in China. So that goes, I think, the common prosperity policies goes hand in hand with the dual circulation. That is not contradictory to it at all. There's one point Ashley mentioned I would like to add, that is about the audit oversight issue. I don't fully agree with Ashley about the delisting of Chinese firms from the US. I think that it is up to the companies to choose the venue of their listings. Of course, we fully support Chinese firms choosing Hong Kong as a primary venue for listing. But at the same time, we are open for the firms to choose their listing venue. And we don't think that the delisting of Chinese firm from the US market is a good thing for both the companies, either for the companies or for global investors, or for the Chinese-US relationship. So we at CSRC actually are working very hard to resolve the auditing issue with our US counterparts. And the communication is currently smooth and open. Of course, there's a risk of delisting of these companies, but we are working very hard to prevent it from happening, because we see it's very bad. It's an all-lose situation. And so that in a summary, I think that back to the Hong Kong's role, only when we continue to strengthen such a role as a gateway, we can see very good development of the capital markets in Mainland and Hong Kong, and we can see the continuous, very strong status of Hong Kong as an international financial center. Thank you.
Thank you, Mr. Shen. Well, perhaps I can turn to Rachel now. Let me ask, from the buy-side perspective, what are the opportunities you see for Hong Kong's development as an asset management center?
So thank you very much, and everyone, thank you for being here. It's actually lovely to see a big conference hall full of people, and so I think this is a great step forward. Look, Hong Kong is uniquely positioned in asset management in Asia. When we talk about Hong Kong as a gateway to China, it is actually, Hong Kong is more than that. Hong Kong is the place where we connect banking, private banking, wealth management, markets, regulatory, I think, foresight, and all of that connects through Hong Kong. Hong Kong is also the gateway to China in the sense of communication. As somebody who's recently moved back here from Western Europe, I can tell you that there is a great deal of misunderstanding in both Europe and the US about China and about Asia and about Hong Kong. And partly that's driven by the pandemic and the inability to travel for 2 years. When you don't have fluid communication, when you don't have people meeting, sharing food, sharing drink, understanding that at the end of the day, we face many common issues, it makes it hard. And I think Hong Kong's ability to act as this interface between China and the rest of the world in helping to communicate what is happening in China, to help communicate what is happening in Asia, I think that's the critical advantage Hong Kong has. It's not a unique advantage. Other countries do have this as well. But Hong Kong is uniquely placed to have that particular role in the world. So I remain a very strong, I have a very strong bullish view on the role of Hong Kong, both now, but also in the future. And if you think about the structural drivers that underline this position of Hong Kong, particularly for asset management, we have a transparent and predictable regulatory regime. That's very important for investors. All over the world, investors in any part of the world are looking for exactly that, transparent regulatory regime that you can understand. I think we have that here. You're also looking at geographical convenience. Hong Kong is a great place to be based. If you roll forward when the days of the pandemic are over, Hong Kong will remain the best geographic center to be facing many parts of Asia, both Hong Kong but also throughout North Asia in particular. So I think that's an advantage. I think the capital market, the depth of the capital markets here, particularly in equities, the connectivity between Hong Kong and the growing capital markets in China, whether in Shanghai or elsewhere, are critically important. And then finally, just the growth opportunities provided by the opening of China's markets. That is incredibly exciting. Again, go forward beyond the days of the pandemic, the ability to travel between here and China is critically important. And again, it comes back to this unique position that we have in Hong Kong to help the rest of the world understand China and to demystify, if you like, what is going on. Specifically in terms of current movements, I think the GBA Wealth Management Connect scheme is very important. The expansion of the stock and bond connect schemes between Hong Kong and the mainland, are really, really good examples of how Hong Kong can serve as a gateway to the mainland going forward. And the major appeal of these schemes for international investors is that ability to leverage the Hong Kong ecosystem. So being able to use the strength of the Hong Kong ecosystem to understand how to do business in China, whether that's across trading or settlement practices, the legal environment here in Hong Kong, interactions with counterparties. Hong Kong is familiar to foreign investors, and familiarity is very important. Finally, I would say, though, that there are a number of other regions and parts of Asia that do have the potential to serve as regional asset management hubs. And so Hong Kong should not be complacent despite its obvious unique advantages. People move quickly, and the edge that Hong Kong has is very tough to establish, but it's also very hard to hold on to. We have a competitive marketplace for talent, and I think that Hong Kong needs to stay at the front of the trends that are shaping the asset management industry. So sustainable investing is critical. Sustainable investing, net zero finance, transition finance, green finance, these areas are going to be so important to the world. The announcements made as a result of COP26, the groundbreaking work that was done there, it is very important that Hong Kong stays at the forefront of this. So we need to build on the work such as the SFC's consultation paper on the disclosure of climate-related risks. We have to work to align with emerging global standards. I think all of that is very important. Second area, I think, is advancing digitalization and using technology to promote better standards, prudent risk management, and efficient operational processes. That will be key. And then finally, coming back to talent, we have to attract and build talent pools. I thought the comment on the number of people in Hong Kong working in financial services relative to some other cities was very apt. We have an advantage at the moment in this city, and I hope that we can retain that in the COVID era, because the challenge of quarantines is beginning to bite, I think. And so I hope that we can do everything we can to make sure that we don't lose the advantage that the city has over the next year or two. Thank you.
Thank you, Rachel. Changes in the geopolitical landscape, and particularly frictions between China and the US, have posed challenges for Hong Kong. So can I now turn to Nicolas? How has Hong Kong's role as a financial center been affected, whether positively or negatively? And what are the implications for the stock exchange?
Thank you very much, Tim. Without a doubt, and if you just look at this panel, the relationship between the US and China is very, very important. I mean, we have Rachel here representing the largest asset manager in the world. We have Gokul representing one of the largest investment banks in the world that, of course, based in the US with a very significant presence here, a lot of business, a lot of great performance probably over the last couple of years. And so when I think about the US-China relationships and its impact in Hong Kong, first thing I have to do is look at the facts. A lot of the facts were mentioned by the Finance Secretary in his speech. Tim, you mentioned a lot of them. The fact that Hong Kong became the third global financial center in the world by Global Financial Centers Index measurement, from number 4 to number 3 in 1 year, that is like a representation that Hong Kong is actually advancing in its position. We also see that in the level of trading that we see in our own exchange. So if I look back a couple of years ago, 2019, the average daily traded volume was 89 billion. This year, it'll be somewhere between 170 to 180, so volume is doubling. That doesn't mean that there is no impact whatsoever of what's happening with the US. It is an impact, and it is our role to make sure that we buffer some of those impacts. I mean, our role is a super connector. What we want to be doing is to make sure that there is actually more dialogue, more communication, more exchange between all nations around the world. And we want to be in the middle to try to facilitate that situation. So we actually want to have more interaction between all nations, and we play a critical role in putting together people from all walks of life around the financial sector to make sure that that happens. Now, it is no accident that Hong Kong is going through a very strong period from a financial point of view, despite all the negative consequences that we have been seeing in the relationship between the US and China. There was a lot of work done by the SFC, a lot of work done by the CSRC, a lot of work done by HKEX with the listing reforms of 2018. And that puts together a lot of the things that we've been discussing about, like dual circulation, the prosperity of like all people around the world. I mean, a good example, and I'd like to just like focus on this one a bit, is the listing reforms, in particular around Chapter 18A, which is the one focused around the biotech sector, on what was created there. The fact that all of a sudden after that, I mean, there was more than 200 billion Hong Kong dollars raised from biotech companies that used this chapter. About half of that was actually raised to support companies with no revenues yet, 0 revenues, but they are creating some of the treatments, medicine, diagnostics that are, you know, so fundamental to beating a lot of the most killer diseases that humanity has seen. I mean, this is a great example of how we're trying to make sure that we connect capital with great ideas, how we connect the financial markets with the real economy, creating opportunities, you know, for people to generate jobs, to resolve some of the biggest problems that we have. And when we look at the reforms of 2018, altogether, about $800 billion Hong Kong dollars of additional capital was raised. And we have the homecoming regime. And while we support markets from all over the world to do well, we want Singapore to do well. We want the exchanges in the mainland to do very well. We want the exchanges in the US to actually, you know, be very active and vibrant, because vibrancy across the financial world is going to help everyone, including Hong Kong. And so, despite that, we have to be prepared, and we have to make sure that we set up Hong Kong to welcome a lot of companies that may prefer to list in a market closer to home. So those homecoming IPOs have actually attracted about 300 billion Hong Kong dollars from investors that have decided to invest in Chinese companies in this part of the world, in addition to also in the US. And we're seeing more and more companies that are using this dual primary listing regime to actually list in Hong Kong. So, I mean, a lot of exciting things that allow this connectivity. And if I look forward, there are a lot of more things that I think will continue gathering this interest from the financial players from the US, from Europe. Many of you know I'm from Argentina. I hope Latin America also becomes, you know, a bigger part of Hong Kong and more roles played. Lots of opportunity around the Greater Bay Area, Wealth Management Connect, making sure that we create this as a financial center that groups businesses from all over the world.
Okay, thank you so much, Nicolas. Just on the same subject, can I just, Charles, do you have any perspective on these challenges, in particular these geopolitical tensions?
Yes, thank you, Tim. I think there definitely will be positive, some of relative positive impact, and there are a lot of negative impact, which provide the challenges to the market participants like us. So we definitely have seen a lot of companies, they are reconsidering where to be listed, right? So a lot of ADRs are coming back to Hong Kong based on our daily discussion with our clients. I think that probably will be relatively positive for Hong Kong and for Hong Kong Stock Exchange. On the challenges side, so first of all, I think since 2020, U.S. government has imposed more than imposed a sanction on more than 100 entities and individuals, and through the president's executive order, so which provide a lot of challenges to the market participants like us. Because a lot of Chinese companies, they do operate globally. They do have business in Hong Kong. They do have business outside Hong Kong. So when we provide the investment banking service to them, it basically gives us much more complicated business environment, much more sanction risk, and we need to do much more efforts in terms of client onboarding and client due diligence. And on the other hand, even on our staff, when our employees start to trade for the individual personal trading, when they need to trade US stocks, we need to impose a lot of restriction, and they need to declare a lot of things during the compliance system. So I think not only for the company level, so even for the financial service employees, I think there will be certain impact. I think on the other hand is when those market participants are looking at both countries, when they want to participate in both countries, especially between China and US, we have seen a lot of, quite a few leading US firms. They have expanded significantly in China to gain a wholly owned license in both buy side and sell side. But we also have seen some of the firms, they started to held back to see whether it's a good timing to further invest in China. So there definitely will be a lot of impact to market participants in both sell side and buy side. And for the Chinese firms like us, when we look in the US is the number one capital market in the world. We remain very interested in the US market. But when we start to think about our expansion plan in the US, we'll be much more cautious down the road. Last but not least is on the FDI. So I look at the number, the two-way FDI number in 2020 was 15.9 billion US dollar. Combining was lowest since 2009 for both countries. And China FDI to US was 7.2 billion US dollar in 2020. Slightly increased from 2019. It was because there are two large transactions: Tencent's purchase on the Universal Music Group and HPG's acquisition of GNC. On the US to China side, US FDI into China dropped to 8.7 billion in 2020, which was a third drop compared with 2019. And there was no significant merger acquisition happened. It was all medium-sized takeover. So if I just look at 15.9 billion FDI between the two countries, even Morgan Stanley and CLSA share on the fees is still relative. It's not relatively small compared with the previous track record. Thank you.
Okay, thank you. We can see that the financial flows between Hong Kong and the mainland remain actually very strong and show no sign of slowing down. But global investors often say that navigating the mainland markets is difficult compared with what they're used to in the West. So, Rachel, can I ask you, what are the main issues here? And what role can Hong Kong play in enabling the industry to address some of these concerns?
Yeah, thank you. That's a great question. I think from a global investor perspective, the thing that they struggle with is the complexity across the different access channels to invest in China. So whether that's, how do you understand QFII, Stock Connect, Bond Connect, CIBM Direct Access, what is GBA Wealth Connect? There are many ways of accessing China, and each one comes with its own requirements on registration, on trading, on settlement, on funding, investment restrictions, compliance. So that creates a lot of complexity. It's much easier to invest in other countries where there is only one way of investing. So I think, how can Hong Kong help? Well, I think Hong Kong can help by figuring out how and advocating for how you can relax some of the restrictions that it's very unclear how they benefit the market. Harmonization of rules across the different channels would be very helpful. And helping to align trading and settlement restrictions and requirements with international practices. And I think the creativity that Hong Kong has used in devising solutions for its own market can actually help to work with the regulators and the markets in China to make that easier for global investors to both understand and navigate. The second thing I think, I come back to something I said before. I'm a passionate believer that Hong Kong can act as a bridge of communication. And we have more to do here to help global investors understand the Chinese markets. So I think everyone needs to work hard on that, and that's certainly something we're very focused on. And then finally, as China opens up, and we have things like being able to have wholly owned wealth management companies, fund management companies, banking entities, et cetera, et cetera. I think there's a role for Hong Kong in using its experience as a risk management center, and really I believe a world-class risk management center, to help some of those operational areas evolve within China, and helping understand how we navigate what are very reasonable data concerns that China has about sharing data outside of China, and how we navigate those regulations so that we can get very specific on what is not to be shared and cannot be shared, and what maybe doesn't cause any harm by being shared, in order for international companies and international investors to be able to monitor their positions. So that's a very specific area, but I do think that there is work that the SFC and the industry could do to help discuss that with China. But I wouldn't mind taking a step back, actually. I think that we've talked a lot today about the role Hong Kong plays in China, which I think is right, but there's a risk we're not talking much about the role Hong Kong plays in the rest of Asia, in particular Southeast Asia. And I'm interested in what are the initiatives that we can do here to expand our role in that particular market.
Thank you. Thank you, Rachel. Just on the same point, can I ask Gokul, have there been challenges for you navigating the mainland markets?
I mean, I think as Rachel points out, Tim, the complexity is the biggest challenge. But in many ways, I think the complexity is also the biggest opportunity for Hong Kong. Because, and again, I go back to Stock Connect, because that, by any standard, has been the most significant development as it relates to Hong Kong capital markets over the last several years. The reason Stock Connect has been as successful as it's been is because it provides a fairly simple, straightforward, easy-to-access mechanism, right? And I think we just need more of that. And in that regard, the relationship between Hong Kong and China and the capital markets is highly symbiotic, because what China needs, and I think what China wants, is access to global institutional capital. What Hong Kong provides is that access to global institutional capital. So the ability to actually provide an alternative that is perhaps easier to understand, people are more willing to accept, is really where the opportunity lies for both Hong Kong, but also China. So I actually think this is the win-win for everyone, right? I mean, the Chinese markets, the domestic markets are large, they're liquid, they're a combination of retail getting increasingly institutional. I think if global institutions begin to participate in greater size, both from offshore, but also as folks like BlackRock have done, go onshore and establish a domestic presence, that's just a highly accretive, highly positive relationship that needs to be built and developed.
Thank you. Nicolas, anything you would like to add, maybe on the risk management side of things?
Yes, I mean, there's the opportunity is clearly there. The opportunity to have a market from a capital markets point of view. I've been publicly mentioning the fact that I believe that over the next 10 years, the economy of China will double. The potential is there for the market to triple. And to do that, we have to create the right ecosystem and infrastructure, which includes adding some instruments. And a good example of that is the recent implementation of the A50 futures, which, by the way, would have not been possible without the tireless effort, Tim, of your team, and Ashley, your team, a lot of the people in here that did really work tirelessly. Of course, the CSRC was provided its support, very, very supportive of that development. So that is a good example of how you can create instruments that facilitate the development, the trust, providing the instruments that allows them to hedge their position, to manage their positions, and that will facilitate the growth of this market. And when I say that the market grows to $100 trillion over the next 10 years, $100 trillion is not just like the size of the market, it's that all those markets are part of supporting this real economy. That is part of creating this prosperity that we're talking about. Now, it's not just that, it's also the development, and Rachel, you pointed out the issues around Southeast Asia and making sure that Southeast Asia is included. Today, more than around 6% of the companies listed on our exchange come from Southeast Asia. That number should be growing, and that will also represent a very, very significant part of the market. We've incorporated a suite of 42 MSCI index products to be able to make sure that investors in the same way can create that ecosystem, can continue trading, make that in a seamless way. We believe that will allow also Southeast Asia to develop, and that's why when I speak about the fact that as the financial markets in Singapore, in Southeast Asia, in the mainland develop, Hong Kong is also going to develop. This is going to happen with everyone at the same time. It does require that we create the right ecosystem. We're very fortunate in Hong Kong that we have, one of the best regulatory regimes in the world. Investors feel very, very confident. And with that, we can create a risk management center that support that growth and make that growth a reality.
Thank you. Now, Mr. Shen, I want to ask you about the role of regulation, especially cooperation between the CSRC and the SFC in supporting the synchronized development and expansion of the capital markets, both on the mainland and in Hong Kong. Can we hear your views on that?
Yes, thank you, Chairman Lui. And I think I fully agree with other panelists' view on that the ecosystem in Hong Kong. Such an ecosystem is essential, to maintain legal certainty and investor confidence, and also gathered in Hong Kong, the top firms, financial services firms, and attract a lot of capital with its, free capital flow regimes. So I think that is one thing that the mainland have always been drawing on in terms of experiences. So it's same. I think it's same for as other colleagues mentioned earlier, that when they as an investor navigate in the Chinese capital markets, I think a lot of the hurdles to be passed is institutional hurdles rather than other things. So it means there's a long way to go still for mainland capital markets to improve our regulation, and particularly to make regulations and policies transparent and stable and predictable. So for these, CSRC have been always attach much importance and making efforts. So in relation to the cooperation between mainland and Hong Kong capital markets and also among regulators, I can they can never underestimate such important element in the development of mainland markets as well as the cooperations. And last year, actually, CSRC we celebrate the 30 years anniversary since the establishment of the domestic markets. We have a book compiled, and there's one special chapter contributed to the international cooperation. If you read that chapter, I think majority of the contents are related to the cooperation between mainland and Hong Kong. So so that the cooperation between the two sides particularly between the regulators, are both extensive and very effective in the past. I think this is the best win-win I've ever seen, I think, in this regard. And by, the strong cooperation at all levels, both at the regulatory side and also at the market side, and that has been very helpful for both China, the mainland capital markets, to grow into second largest in size in the equity market, for example. But also, I think it's very helpful for improvement of regulation in the domestic market towards a transparent, predictable regulatory system. At the same time, I think it's also helpful for Hong Kong to maintain its important role as a financial center with a strong ecosystem talked about by many panelists earlier. And that is a core of confidence for investors to invest in Hong Kong and invest in mainland China. And they see a lot of opportunities in all the access, points for and risk management tools for the markets. So I think in the future, this is as the role of Hong Kong as a financial gateway. This cooperation is only to be strengthened, and with this cooperation, I think the best part of it is, is the trust between the markets and also the regulators established along the years. And this is very helpful, not only for development of the markets on the two sides, but also very important for the two sides to work even closer to each other to mitigate the geopolitical risk and all other risks that we are facing now, challenging us at this moment. So this is, I think, in a summary, this cooperation, and also our early topic, the Hong Kong's role as the financial gateway and the stronger role in the future, is the best example of the benefits of one country, two systems, and will be, I think, add to the success of the markets into the future. Thank you.
Thank you, Mr. Shen. We're now coming to the very close to the end of the panel discussion, actually. Can I just ask Ashley, do you want to quickly summarize, what has been said during the panel?
Well, I think a lot has been said, and I think I'll avoid trying to summarize because it's been said, I think, by many of the panelists better than I can summarize in just a few words. But I just would like to come back on really 2 points, which is one is around how we approach market development and regulation in Hong Kong, and then the second is just to talk a little bit about the relationship between ourselves and the CSRC, and also just to comment a little bit on the issue around capital markets potential decoupling, which Shen Bing mentioned first. So on the regulatory approach, I think one thing that I should sort of make clear is that quite often market participants would say, we want a disclosure market. We don't need all these other rules and regulations. Actually, if you look at the ingredients for success of some of the most important developments that have occurred within the rules in Hong Kong, they're based basically on constructing frameworks that limit risk, establish certainty, but also enable that market to thrive. And biotech is a pretty good example of that, with its own framework within its own chapter in the listing rules. And in fact, a few years ago, that originated because there was a proposal around a third board for a large range of pre-revenue companies. And we suggested at the time that it would be far better to focus on the main board and to work out which type of pre-revenue companies would be suitable for a public listing. And that ended up with the biotech chapter and the success. And the same approach, I think, is important in relation to proposals such as SPACs, for example. So that's just one point about overall approach. On the question of Hong Kong, the mainland, the CSRC, ourselves, one thing I would, market participants don't see this, but the word that Shen Bing used was trust. And we basically have interactions with the CSRC, I think Shen Bing would agree, virtually every day of the week and sometimes weekends. And the degree to which we understand each other's point of view working in two different systems, but making sure that the way in which market access structures are based on understandings that manage cross-border risk. That's really the point. We work incredibly hard, and sometimes it takes longer than we would like, but we do work incredibly hard to embed the cross-border regulatory understandings, frameworks, and agreements to ensure that those access structures are successful. And over the years, I think as a result of all of the conversations we've had and negotiations we've had with the CSRC, two things have resulted. Firstly, on a personal level, I think many of us are friends in reality. And it's a shame that we haven't been able to catch up with each other in person so much over the last few months. But that will reset at some point. So that's one aspect of it. The other aspect is, and this just going back to the point where Shen Bing said he disagreed a bit with me on the US, and in particular this question of delisting in the US. What I was kind of reflecting is what I've picked up really in international interactions, and it's basically this separation and difference between the global institutional private sector, global investment banks, global fund managers, etc., who've expressed on this panel that they see Hong Kong and China as a whole as a huge opportunity set that is demonstrable. And then what I see is the official sector in the US articulating an approach which is fairly hard line. And I do agree with Shen Bing that it would be overall a bad outcome if there was an inability to agree on this question of audit oversight. But I think one of the differences is that as a result of our relationship with the CSRC, our bilateral relationship, we do end up with answers to similar questions which work. So, for example, we signed, I think it was 2 or 3 years ago, a tripartite MOU between ourselves, the CSRC, and the Ministry of Finance, all around the way mainly from an enforcement perspective, we access audit working papers. And similarly, the Financial Reporting Council have entered into similar agreements around their audit oversight role. So, and it's not surprising, given our position in Hong Kong vis-a-vis global firms, global capital, and China, that we're able to construct the regulatory underpinnings to all of this activity that, frankly, no one else can replicate. Just on the point about delisting, etc., as I say, I totally agree it will be a bad thing, and I know that the CSRC is working hard to reach agreement. My only point is that I think sometimes politics can interrupt technical solutions that are sensible and that are achievable. And I just pick up, as I say, a degree of political attitude within, basically the US establishment that is not necessarily conducive to better outcomes. But I'll leave it there. Thank you.
Thank you, Ashley. Well, that's about all the time we have, unfortunately. Originally, I was going to see whether there were any questions from the audience, but the electronic clock in front of me suggests that we are nearly 5 minutes over time already. And since we have a very tight timetable, I have to draw this panel discussion to a close. I think we all agree that Hong Kong's sound fundamentals and robust regulatory framework has helped shore up investors' confidence. Nonetheless, we obviously need to stay ahead of the changes that are reshaping capital markets all over the world. And as we have heard, these changes will present significant opportunities as well. So once again, let me thank all our panelists for joining us today, especially Mr. Shen for appearing from Beijing. So thank you very much for your participation. Thank you.